What is going on, everybody? Welcome back to another video, and this video is a pretty important video, and I got a lot of information in this one, and I'm actually got a recommendation for everybody to go and see this. So with that being said, let's go on ahead and talk about this tax problem with QYLD. Cue the intro.
I've been getting dirty money.
Hey guys, thank you for watching this video. Don't forget to hit that thumbs up and subscribe. I'm putting out at least one video a week, giving you guys absolutely free content that's gonna help you guys, whether it's long-term, short-term, just in finance and everything like that. So with that being said, let's jump back to the video.
Okay guys, so obviously a lot of people like QYLD, XYLD, RYLD, all these covered call ETFs. I've even said that I've owned them and stuff like that, so I didn't really have a problem until, and I didn't even look at this until my CPA pointed it out to me when I was sending him a bunch of documents and stuff like that this year. So, QYLD, great strategy to make money. Not gonna lie to you, doing covered calls is a great strategy that I think everybody should be able to do, especially during retirement. It's gonna create another source of income. Why not? Especially when you guys look at the dividends. Guys, they've been great here. I'm not going to lie to you. It's been a great year. 12.5 or 12% a year basically has been super, super solid. Now, here's the problem. A lot of people invest and they expect, just like when you invest into real estate, if you haven't invested into real estate, you can write off the depreciation and things like that, and you get tax benefits from buying real estate. And if you do buy and sell, and then you can do a 10, 30, maybe, I don't remember the exact form, but my dad was in real estate growing up. Then you can take that money, instead of paying taxes on it, you can roll it into a new deal. Well, the problem with QYLD is the tax clarification. So I pulled up this because he's going to write it out for you. And this is something that, again, if you guys have Seeking Alpha, I use this app on my phone. And this is actually what brought it to my attention. The first time I was like, oh, maybe this isn't true. And then my tax guy talked to me about it. And I invest into monthly dividend stocks very heavily. I like them. I like the monthly income. I like the flow of income. Plus, it compounds just a little bit faster. Now, I also have stocks like J&J and things like that I do covered calls on that. I like them a lot. They're very, very solid companies. I look at them as a very, very safe investment. So, and I also sell calls and puts, and vertical spreads and stuff like that. So, but QYLD here, income, obviously by selling index options. Historical data has shown it as distributing income as return of capital, which is basically going to give you a tax break. What basically is what they're saying right there in layman's terms. So Global X confirmed that 2021 tax purposes distributed received shall be treated as ordinary income or as short-term gains, also known as capital gains, on final forms. Now, what is the problem with this? That means you are not exempt from paying capital gains. It's not good, guys. We invest in the stocks to not have to pay capital gains on fast money and things like that. So that's a big bummer for QYLD. I'm not going to lie. And you obviously saw, I believe the stock dropped as well on here. If you look at QYLD, yeah, when all this started coming out, it dropped even further, which is not a good sign. It's at $20. Price at publication was at $20.01. Let's just Google QYLD. No, I don't want the taxes. I just want to know what the stock price is here. Yeah, we are now below $20. Previous close was $20.12. If we look at the max, it's really never been this low except for when COVID hit at $18.23. So, guys, this is something that is a red flag to me. I would rather buy an HRZ in or a couple of other dividend stocks that are still monthly dividend, like REITs. I believe Blackstone has one. Gladstone, I believe, has, I think it's GLAD. There's multiple REITs that I've talked about that pay monthly dividend stocks. There's definitely reviews. Search my channel for them. They'll be right there. They're not very far down my list of videos. But you're not getting a great tax return here on this one. So in this article right here, we'll explain a lot more, but basically in conclusion, I think this is the important part here. Global X confirmed to me that for the tax year 2021, distribution shall be classified as on tax document be 100% ordinary dividends or short-term capital gains. Guys, the rich try to avoid this as much as possible when paying capital gains. Just like why you would not sell a house after, if you're not flipping it, why you would not sell your house unless you've lived there for more than 2 years so you don't have to pay capital gains. I think this is a very, very important thing. So any investor who held QYLD is a taxable account during 2021 are likely to have to report taxable income. So if you are holding this in a Roth IRA or something like that, you're probably good. Again, I don't have a Roth IRA due to income reasons and things like that. I just don't. I have different tax accounts, but I don't hold QYLD in those tax accounts. But you should be good if you're in a Roth IRA. But if you're in a regular income or regular account, just a regular brokerage account, you're going to get hit with short-term capital gains, and it's not going to be a great one. So I want to keep this video short, simple. It is working. The biggest thing that I don't like about this is if you go to documents, it's going to show you supplemental tax information. It's going to show you a bunch of different forms, which is a 19A here. And all of these that I've seen so far, I know if you look back in 2020, it does not show them as normal income or capital gains. See, it shows it as 0 here. Net investment income and return on capital gains here. So that's very, very crappy of them. I'm not going to lie to you guys. I'm extremely, extremely disappointed with Global X ETFs on how they handled all this. So with that being said, thank you guys all for watching this video. I hope this helps you understand. There is an Average Joe video that I told you I'm going to recommend that explains more. He called them. I'm not going to call them because I got the paperwork. It is what it is, and it's probably not going to change. Nobody's going to change it. So with that being said, it is what it is. Pay your taxes, get over it, make smarter decisions in the future. We learned our lesson this year. Probably not going to invest any more money into QYLD. I'll go invest into HRZN or other stocks that I can do covered calls on. But thank you guys all for watching this video. I will link the Average Joe video down below. Make sure to go give him a like. Average Joe, if you ever watch this, would love to collaborate with you guys on some videos. And I will see you guys in the next one.